Item 10, conduct of business. Our first item, item A, adopt a resolution accepting the city's comprehensive annual financial report and Measure A funds audit report for the fiscal year ended June 30th, 2014.
Technical difficulties here. Good evening, Mayor and members of the Council. Tonight you have before you the city's 2013-14 Comprehensive Annual Financial Report, or CAFR, and the audit of the Measure A funds for your review and approval. And I do apologize for getting the Measure A report to you delayed. It was an oversight on my part, and I did make a note of it to make sure it's in the packet next time. The annual audit was completed on December 29th, 2014 by the city's independent auditors, Babnick, Trine, Day and Company, and the city was issued an unmodified or clean opinion. It should also be noted that for the fourth year in a row, the city was awarded the Certificate of Achievement for Excellence in Financial Reporting by the Government Finance Officers Association, or GFOA, for the 2012-13 CAFR. Tonight we have the audit partner from Babnick, Trine and Day, Ahmad Gurba, in charge of the city's audit, and he's going to give us a brief overview of the reports before you this evening.
Good evening. My name is Ahmad Garaibe. I am the partner in charge of the audit of the city's financial statements. This is the annual financial report. It's a comprehensive annual financial report. The scope of the audit is to ensure that the financial statements are fairly stated. The financial statements are provided to us by the city's management, and our job is to ensure that the amounts that are reported on the financial statements are fairly stated. What we do is we confirm the balances, we confirm your property taxes, we confirm your sales tax, we confirm different accounts that are reported on the balance sheet, cash balances, receivables, and so on and so forth. And then at the end, we are required to opine on the fair presentation of these financial statements and render an opinion on these financial statements. The opinion on the financial statements, I'm pleased to let you know that it is a clean opinion, which means that these financial statements are fairly stated in all material respect. In addition, you are a local government. You also receive grant funding such as Measure A. We as auditors are required to report to you non-compliance with the laws and regulations and let you know if we have modifications to the opinion. Over and above, we look at your controls. We are required to communicate to you any significant deficiencies or material weaknesses noted in the internal control. When we're talking about internal control, we talk about the manner that you process cash receipts, cash disbursements, the manner that you process payroll. So we take a look at the internal controls that are followed by city staff, and we are required to report to you whether we noted any deficiencies in these controls as to how they are designed. And I'm pleased to let you know that we noted no exceptions with respect to the opinion on compliance, and we noted no exceptions with respect to reporting to you whether we noted any deficiencies in the internal control. We encountered no difficulties in the performance of the audit. The city's management and city staff has been very interactive and proactive in ensuring that our audit recommendations or any questions that they had or any recommendations, any new accounting pronouncements, it has always been communicated between us and the management, and very cooperative, and we finalized the audit, and the audit went very smoothly. So we encountered no difficulties in the performance of the audit. Some highlights of the city's financial statements. You're going to look at the main financial statements are located on page 19 and 21 of the financial statements. It's basically a balance sheet and an income statement. They call it a statement of net position. It has some 2013 comparative data in there. What you're going to notice is that equity for the city-wide financial statements is about $128 million. Most of it is invested in capital assets. The unrestricted equity is about $20 million. but it's a combination of the utility funds and then the governmental funds. You do have that pension obligation in there, so when we're talking about the governmental activities, the financial statements is showing a combined equity of about $7 or $8 million. Some of it is restricted, some of it is unrestricted. The income statement, again, it's noted on page 21 and 22. They call it the statement of activities. It shows that the revenues specifically for the business type activities exceeded the expenses by about $12 million. But again, although revenues had increased, the city had some capital projects with respect to the enterprise funds.
Yeah, and I wanted to jump in there too, because of the rate increases that was expected, and that money is allocated to capital infrastructure improvements.
From a governmental perspective, revenues equated to expenses. Actually, no, I'm sorry. Revenues exceeded the budget by about $4 million. And the reason that it's higher than the budget is due to the state of the economy. Higher property taxes, higher sales taxes were coming in. Some additional RDA fundings, higher motel taxes. Basically, it's just the state of economy, obviously, and hence the increase in the revenues. Expenses remained almost about at the same level as budget, a slight variance in there as a result of salary savings. Reserves, they were, I believe, $16 million in the prior year. The combined between the general fund, the capital improvement reserve, and the emergency disaster, there are about $19 million. So it's about $3 million increase in the reserves. Significant accounting pronouncements upcoming in the subsequent year. We have GASB 68, which requires local governments to recognize pension liabilities on the financial statements. The way, and specifically in California, the way pension is organized is that it's administered by CalPERS, which is in Sacramento. And what they were doing is they were polling all the local governments all together and just publishing one financial report showing the unfunded pension liability. Then this new pronouncement, effective for the next fiscal year, 2015, requires local governments to recognize their proportionate share of that pension liability. You also have previously your OPEB liability. Between those, we don't know what the final numbers are from CalPERS perspective. They're still performing the calculation. We do know that the OPEB liability, the unfunded liability, is disclosed in the financial statements. I believe it's about 40 million, 43 million. And then your share of that pension liability for CalPERS is an additional 40 million. That's about $80 million in unfunded liabilities. It's not a funding requirement. It's really a reporting requirement on the financial statements. It is indeed a liability that will end up being paid, but it will be paid over the next 30 or 40 years, I mean, depending on when people retire and how long they're going to be earning their pensions. Again, same thing, a discount rate for OPEB is about 4%. Again, it's a reporting requirement as opposed to a funding requirement. And with that, I'll be more than happy to take any questions.
Any questions?
The Chair, just on the liabilities, I wanted to talk about the long-term liabilities. Obviously, there's the retirement and there's other aspects. So how are we looking as far as long-term? Obviously, things are looking good today, but planning for the future and those expenditures and having to put away, and obviously it's out there down the road, but it will catch up to us someday.
That's correct. From a CalPERS perspective, in the past, and that practice is going to continue in the future. Every time the city processes payroll, they send them a check or a wire for pension contributions, and that pension is composed of two segments. One for active employees, and another contribution amount is for retirees or past services. So from a funding requirement, CalPERS is ensuring and following up on the funding requirements and ensuring that at the end of the day, that pension fund in Sacramento will be able to meet its obligation requirements. From an OPEB perspective, when you look at the plan, it does not have any assets in there. It's just, it reports what the total liability is. But relatively speaking to other local governments, this is really the general practice, which is a pay-as-you-go. Again, these liabilities will be paid. I mean, in some instances, I was looking at one of those pension funds. It's going to take about 60 years until it gets paid because people are active, and until they retire, and they continue to receive their health benefits, it's going to take a while until those payments are processed. So it's a long-term, it's a really long-term liability. And before GASB didn't really want these liabilities recorded on the financial statements. They're changing their minds little by little as we go along, and now they're requiring the cities or local governments to report these liabilities. But from a funding perspective, I would say that the city is probably healthier or comparable to other local governments in the state of California.
That was going to be my follow-up question, so thank you. That's it for now.
All right.
Good. Anyone else? Okay, we're asking for a resolution.
I'll introduce the resolution.
Councilmember O'Connell.
Aye.
Councilmember Ibarra.
Aye.
Councilmember Medina.
Aye.
Vice Mayor Salazar.
Aye.
Mayor Ruane.
Aye.